So
It's your
David, does
monkey business. That's what it is.
What was that, Paul?
does that Eli Lilly news shock you? It's a big miss, right?
Yes, it's a huge miss, and that's what I think is great about it. It's surprising because I mean it's a quality company, but it's not surprising. Well, I'm not going to talk about it because that's what I want to talk about on the
Yeah,
show.
Yeah,
don't
save it.
steal
Save it
the
up.
headline here, Paul.
Yeah, very intriguing.
Do it.
Very intriguing.
Yeah. Channel destocking at
But
Lilly.
my guess is that Russell's going to jump on and say somehow it's bad for him. He can't help himself. He's going to find some way.
No, it's not me saying that. It's the market saying that.
Paul, you have to get out your gloves here. Keep these guys away from. I like how they're on the bottom too. They're next to each other, about to fight.
Should we face each other, Russell? Let's face each other. Am I facing the
our,
right way?
That's right. Can you turn to the side? Wrong way, Russell. Wrong way. Yeah, like put your finger out. That's right. Get that exactly. Put your head to the side, Russell, and then you can hit it.
Here, Russell,
Like that.
Russell, put your hands up.
Like that.
There
There
you
you go.
go.
You're pushing against each other.
Yeah, a live feed from an MMA cage. How about that? You could do a cage match.
Exactly.
Russell mountain climbs, so I think he'd take me. So
Yeah. Just no more push-ups. No more push-up competitions.
Oh, yeah.
Well, I never. Just to go on the record, since we are live, I never challenge someone to push-ups for a bet.
Maybe you could do a virtual one. You could get a virtual character and do it.
You guys remember the movie Stripes from the old days with Bill Murray?
Sure.
Yeah,
I remember he had the push-up contest, and he could do like 3.
Yep.
That dude lives in Charleston, so I see him around all the time.
Nice.
He's a funny guy. He's great.
Yeah, he owns our minor league baseball team.
Yeah, David, it's
for a
crazy
second,
that
I was
Eli
thinking about the Savannah Bananas.
Yeah, they're big. I've seen them play.
Yeah.
Well, let's think about what this next week. Was there anything happening in the next week or two?
I don't know. I'm going to go on vacation. I'm kidding.
I voted yesterday. Everybody's asking me about the Trump trade. I guess they're assuming now that he's going to win, and how would you benefit? And I don't know. Wouldn't that already be in the stock prices by now, except for maybe shorting DJT?
There are so many people that I know that are on different chat things that I have where they're losing it. Like they're literally losing it. Rather than just be like, oh, we disagree. It comes down to it's literally as though they were in the Treadstone Project and they can't consider that other people think a different way.
Yeah.
By the way, that's a Jason Bourne reference for the folks.
Did not know that. I don't know.
The DJT, it's really not shortable. It has a 300% margin requirement on it, and you can't get a borrow. So it's just a giant squeeze right now. But that's really popular in this market. I know, David. The market says this Lilly is bad for HIMSS. Not me. Down 10%. Not me.
I knew it. I knew he couldn't.
Oh, I can feel it.
It's as though you put out bait, and it's like, or the chum, and all of a sudden Russell's like, ah.
I'm a fly fisherman at heart. There we go. Put it out there.
All right, guys, we're coming in within 30 seconds.
Behind the smiles.
I think I'm going to buy more HIMSS right now, actually, just because of what Russell said.
Just to spite Russell.
Piss him off.
I'm going to mark these shares. I'm going to mark these shares the Russell shares, and if I lose money, I'm going to ask him for the money.
The Russell tranche.
Here, what are you bidding? Let me put it out for you.
All right, guys, get ready.
All right. Here we go.
Good morning, all. Welcome back to Wall Street Beats. Please subscribe if you're interested. WallStreetBeats.com. October 30th, 2024 We're literally just days away from, some people think, a monumental presidential election here in the United States. All kinds of really interesting stuff to talk about today, given reports last night and this morning on covered companies. Esteemed panel today, Nadine Turman, David Maris, Russell Young. So, David, let's start with you because Eli Lilly is a monster bit of news today. What say you?
Yeah, so Lilly reported, and they had a really big miss. To me, this is not just an earnings miss. This is a giant red flag. They slashed their profit guidance, dialed back the full year revenue outlook a little bit. Now, we're already 3/4 of the way through the year. So when a company has to adjust guidance so late in the game, that tells you that things aren't just a little bit off, that they're really off, like they're
Yes.
off the rails. And remember, this isn't a mid cap company or a small cap company where you can kind of say, well, maybe they don't have the processes in place, whatever. This is one of America's greatest companies, well run, great machine. Now, interestingly, if you remember, we had posted on Wall Street Beats a while ago, like in June, that the CFO left to go to Google. CFOs leaving, even if they're going to Google, never a great thing when you have an amazing product like an obesity drug on the way out. So I think there's going to be a lot of discussion from the leadership on, oh, we're spending so much. I've already seen it already in the articles. CapEx is so much, and we're expanding manufacturing capacity. I think that's kind of a smokescreen a bit because remember, I think all of us know, but manufacturing capacity build out is a CapEx number. That's not an earnings miss number. So I'm not going to get distracted by those. I think the big issue is here is the core P&L metrics, the EPS number. Now, I think it's still overvalued. I've said that before. I think it's a great company. I wish I had been short it. But I think the way that I look at the value is if consensus right now is sitting around $23 and that has to come down because of this, let's say it comes down to $20. Now, people are going to say, well, what multiple should you put on that? And maybe you should go even a further year out or because they're ramping up this drug. I actually think 1 year out is fine at this point. But you say you put a 30 multiple on it or 35 multiple, you're only at $700 at a 35 multiple. If no one who's a value growth investor is going to say 35 is somehow discounting the future. You know, maybe they would. I wouldn't. I want to buy things with enough margin of safety. So I usually wouldn't even go that high. But so unless it begins with a 7, actually, unless it begins with a 6, I'm probably not going to be interested. I might miss a bounce because there will be people who love it and want to buy it. But, this is, I think, a race to the bottom on price. And so on the call today that starts, right now, I want to hear something about what the pricing environment is, because I actually think behind the scenes, pricing's going lower and lower.
Yeah.
So David,
what do you think about, sorry, David,
no.
You see their comments that they said that there's channel destocking in the GLP-1s. That's kind of crazy. Like shortage and channel destocking. What do you think's going on?
So that's the part that I mean by it doesn't make any sense, right? Well, we've tried to manage demand because we don't have enough capacity. Meanwhile, they just said that they aren't in a shortage. It doesn't add up. It's like when you hear, there's a vase broken in the living room and your child is saying, like, and they were the only ones at home. You're like, hey, what happened? And like, I don't know. Like, it just doesn't add up. Like we know the calculus here is pretty simple. You had a shortage, now you don't have a shortage, but somehow now you still have it. Like it doesn't make sense.
And
David,
what about the sympathy decline in Novo? Is that an opportunity, or are you worried about that name too?
Well, no, I'm worried about that name from the overall. It's expensive. It's not nearly as expensive as Lilly. It came down before it. The
Right.
other is I don't think that their follow-on product is going to be their combo product is going to be the savior. And I think they're also face the same price issue, but it's cheaper. So yeah, I'm concerned. I'm actually concerned that it's down in sympathy, but if it is a demand issue, if people are cycling off these products faster than people expected and they're using them intermittently, then that is a problem. Remember, there are analysts out there that were guiding toward. Oh, by the way, airlines, right? They should be up or something, or they should be down, or what was it? Because Goldman or someone had put out a thing that, airlines will be more profitable because everyone's going to be lighter and they'll use less fuel. Like that that was peak. When that report came out is when we should have all shorted it. But again, quality companies, I'm not, I don't think for me that I'm great on shorting just on valuation. I just think that buying something that's a great company when it's cheap is the better way for me. And so cheap to me would be, 600 and something.
Can I put fish food out there? What about Hims? So if you're not quite sure what's going on at Lilly, I'm going to do it for you, Russell. I'm going to keep you to the side, Russell. I'm going to do it for you. So
I'm gonna,
what do you like that? So I'm doing it in a nice way.
So for people who aren't familiar, I think I can turn and go, Russell.
Yes, how dare you?
Russell is
there
is
a
kind of
takeaway if you don't really know what's going on at Lilly, right? Like,
yeah.
what do you do with these names?
Yeah, so Lilly makes this obesity drug. Hims started making one and doing it as a compounded drug, and Hims went up on that news and bears on Hims. One of the reasons that they don't like it, and Russell, that's why we were joking of why Russell, he's a bear on the Hims business, believes that look, that's going to be taken off the market at some point, and that's going to hurt Hims. And so any demand issue with Lilly could be a demand issue for Hims because Hims is selling a compounded version of this. I actually bought Hims on the idea that their base business before any GLP was growing 35% year over year. That's a great growth number. They were increasing their subscriptions. They had more and more patients that were using them. So I think it's a great telemedicine type of approach. This is just now kind of a wrinkle. It's going to be news flow back and forth. I think that's silly because I think they're going to have a blowout quarter. I think that even if the GLP-1s come off the market, they've probably turned those people into hair loss or erection medicine customers anyway. Like, hey, you have diabetes. Have you ever thought of other problems you might have? Now that you're losing weight, let's get you some hair. So I told, joking before the show, I said to Russell, I might just buy more Hims here down 10, 11%, just out of spite. But I do think they're going to have a blowout quarter, and I think the stock will be $30 pretty soon. I hope on the Hims quarter that they break out what their base business did versus the GLP-1 business. That I think would answer all the questions.
Hey, David, we only have 6 days into the election. Any thoughts about trades that we should place or not place between now and then in your sector?
Yeah, so I had mentioned earlier in the week or last week that you've seen the RFK news that Trump has said we're going to let you loose on healthcare, and now I think that's overstating it. He can't be in charge of HHS and the FDA and all these other things. So I think people should just calm down a bit from there. But overall, I think it's negative for biotech. Probably not great for pharma because pharma was not the friend of Trump previously. But he did cut a lot of red tape. So in one way that might be helpful. But I think that the idea, like RFK is not a secret about going after food additives. I think that's going to be the easier thing to go after. Like, let's get rid of certain dyes and certain types of fat. So. All right. NIH budget is bloated. It's $100 billion a year. It needs to be down. So,
all right. Well, interesting. We'll keep an eye on it. Hey, Nadine, why don't you take the floor? You have an interesting Japanese stock that I read your note. It sounds like As the World Turns.
Okay. Yes. So this isn't some venture, Robert idea. This is more clipping a bad news doesn't matter type of name. And a disclosure is my firm owns this. My clients own it in certain accounts. And it's called Olympus. So if you can do local shares, it's 7733JT equity on Bloomberg. Or for the ADR, which obviously doesn't trade as much as the local, but it's OLYMY. And basically its CEO, Stefan Kaufmann, a German guy, left in haste because he allegedly purchased illegal drugs. So obviously it's embarrassing because he's a German citizen brought in to lead a Japanese company. It's an endoscope manufacturer. This guy was brought in last year. The company has about a 70% share in cameras that look inside your body. That's my, David, do you like that? That's my healthcare explanation of what they do. That's really the scientific explanation.
You must have the PhD.
I play a doctor on TV. But basically, his predecessor, Takuchi, was working to sell access, fix things since 2019. This guy was brought in 2023. He was expanding the medical equipment business. But now the old guy's back in the seat during this transition. Value Act, if you guys know, the activists started on a campaign back in 2019, pushed for 3 board directors. It's a $21.8 billion USD market cap company, very similar in EV. You've probably got, call it 10 to 15% upside from here just on the hit down. And if you're looking at multiples, this name relative to other medtech in Japan has about a 20% discount to global medtech sector, which tends to be around EV EBITDA of 16 times on 26. So these guys are actually right now with this news closer down to 12 times. But I kind of separate that out, Paul, with you could get an extra benefit with capital flowing into medtech being preferred to pharma in Japan because of a few reasons. One, there's a lot of uncertainty around business conditions for pharma companies in the US, which is their largest market. And then secondarily, a weaker yen, which obviously we've been seeing. And so, what's going on in the US for pharma names in Japan is, first of all, the Medicare drug pricing negotiation rules for pharma companies and the potential expansion of the scope of products covered by these rules. So you might see people throw in the towel a little bit on Japanese names and say, okay, I don't want pharma, I want medtech. Secondarily, there's negative impacts of shipment pricing at pharma companies due to curtailed maximum limits on patients' out-of-pocket spending under Medicare Part D plans. And then third, you've got some heightened uncertainty around the healthcare system, as we were just talking about, in case we have folks, doing different things after the US elections. So you've got a lot of negative sentiment on pharma overall in Japan. You might see that capital flow, especially people playing against a benchmark, going to medtech versus that. And you've seen a bounce back in the overall healthcare sector, and then medtech in particular in the last few weeks in Japan. A little bit probably because of these reasons, but now you get a little, short-term bonus because people sometimes won't deal with a company that has that kind of leadership change or embarrassing news. But I think that they can, get over this fast. The company's not going to be hampered. They don't really need this guy. They can find someone else to lead the business.
Well, you guys, if you're listening live, you got to subscribe to Wall Street Beats. See us on wallstreetbeats.com. We're having hot takes every day. I mean, think about what David and Nadeem just went through. Healthcare sector, a very aggressive call on one of the largest market caps in the space. And then Nadeem gives you an idea, a Japanese ADR that I guarantee you've never heard of. And so I'm pretty pumped. Let's wind up with Russell Young, and he won't toot his horn, but I will. He's going to talk about some things today. SMCI absolutely getting harpooned. He talked about staying away from this thing months and months and months ago. And then also, how about the conversation that has been going back and forth, going long on Reddit? You guys take a look at the screen. Reddit is up about a third today. Not 1/3%, a third. So anyway, Russell, take us through the litany of your ideas today.
Hey, Paul. Yeah, no, a bunch of stuff to talk about. But first, I have to talk about hymns. I think David's right.
Here we go.
I think hymns is going to be, they're going to be, but the problem is going to be the strength is all going to be from the compounded semaglutide going up. And it's going to be above estimates. And the problem is this is going to come off the market, and management is using this strength in the GLP-1 to sell stock. The CFO has failed to sell all his stock. Mike Chi has selling all of his stock. So to me, this is chum on the water, get people to buy this stock. And I think when you go through the numbers, we're going to see customer acquisition costs going up a lot. And this company, there's going to be, the costs are going up and the numbers are becoming.
So you're shorting it at 2072, just so that I did buy it while we're in that pause. I bought more.
No, I'm in the position, right?
I'm going to create a pay-per-view event with you two guys in a cage.
That's right.
MMA style.
With
We
the
get to hear
shark.
in
Let's see who
November. I mean,
wins.
the FDA this is the biggest embarrassment ever for the FDA that these compounded some GLP-1s are on the market, and this
Oh,
problem's going to go away. And the question is, what are they going to do once the system?
so you think that just to be clear, you're saying that weight loss drugs being compounded and safely given to people is more embarrassing than thalidomide. Just to be clear, I want to get on the record that you're saying that the most embarrassing thing of the FDA is letting these stay on the market.
David, this is a huge embarrassment, right? Compounding rules were never intended for this,
Well,
right?
don't say things like it's the biggest embarrassment. I mean, come on.
Okay, it's the second, it's the third biggest. I mean, you're mincing words. It's crazy.
Mincing
This
words, they're
is
your
a
words.
huge
I didn't mince it. I said, come.
All right,
All right. I'm
Well,
gonna mute
All
myself.
right, Paul, you gotta rope these guys in here, Paul.
Oh, anyway, but
So what else you got, Russell?
good news that there's so much to talk about. But the biggest surprise out of last night was Reddit, right? The business is massively accelerating. You know, Reddit now is the sixth most searched word in Google, and their revenues went up 68%. Their DAUs are up 47%, and the numbers for next year are too low. I mean, this stock's it's going to 120 to 150, putting like a 20 times EBITDA multiple on next year. And as this is now becoming an AI play, I feel like this is just what the street has been looking for, right? We've had, Snapchat has been Snap has been a failure. Pinterest hasn't really worked, and now something with so much engagement and user traction and advertising flocking to it with an AI angle. I think this is going to the head of the class.
Right.
But also, I've been negative on Supermicro. I'm short that too, David. So, this is their audit quarter, right? And Ernst & Young said, we're not signing off on these numbers, and we quit. There's going to be no restatement, but they said they can't trust management. Now, this is a crazy development because Supermicro burned over $2.5 billion of working capital trying to finance his business. So they need to raise money. They have 1.7 in cash, but you need massive working capital to fund this type of growth. So if they don't have working capital, if they can't get credit lines because they don't have audited numbers and they can't sell stock, I mean, this is a huge problem for the underlying business, and we have no idea what the numbers are. And so, bringing a new auditor to redo the numbers, I mean, they might get delisted before they can get their new numbers done because you can't get this done in 2 months' time. So this is, this is crazy. I mean, Supermicro could go broke.
What do you think about Dell and HPE? Still opportunities there?
Yeah, I mean, Dell popped on this news. I mean, I think some of this volume is going to go somewhere, but as we've been talking about, Foxconn has been ramping huge in AI servers, and Supermicro benefited by being an early entrance to this market, but NVIDIA is selling their chips to everyone. And so the servers are being commoditized. And so I think people are scrambling. It's like, who's going to benefit? But there's many players who can make these servers now. But it's not a negative for Dell or HP. That's a positive. I also wanted to touch on Centrus Energy because I called it out as something I was skeptical of before they reported. Now, what's crazy, okay, is on the call, people are saying this is the only American producer of enriched uranium, but they don't produce uranium. They import Russian uranium. They called out American uranium 8 times on the call. But what's even crazier, okay, is all the sales were to foreign buyers. So no one in the U.S. bought their Russian uranium. It's like the U.S. utilities are saying, we don't want to buy Russian uranium. Now they're operating under a waiver to import Russian uranium that expires at the end of this year, and they've lost the ability to sell to foreign customers. So in this euphoria over uranium, people are just being totally ridiculous and buying Centrus here. They're saying that they're going to get back into doing enriched uranium. They have $5 million of equipment. Total PP&E is like $8 million. So they've had demonstration projects. They have no ability to make uranium. They need billions of dollars. Now, the Department of Energy might come and start giving them money, but they have to match it. So if this company's smart, they'd be doing a $500 million offering. But investors buying the stock here are totally delusional and are just going uranium crazy without really understanding the business. And then lastly, it was super interesting. Cuervo called out there's
Yeah.
been a shift in what's happening in smartphones, and they're saying that for the I'm sorry, for the Android phones, is they're shifting from the middle end to the low end. And ARM is billing itself as this big AI play, but it's really a mobile. It's really a mobile play, right? That's where they make their money. And the shift to lower chips is going to be negative for their business. So I'm going to be super interested. I'm negative on ARM, but
Yeah.
I'm super interested to see what they're going to be saying. So I think you stay with the real AI plays, and I'd be cautious of ARM in here too.
Of course, what's the float on ARM? Like 10% or something?
Yeah, it has a huge market cap, and I mean, I don't understand what SoftBank is doing here, but they're crazy, and they don't, they tend to sell at lows and buy at highs, so it benefits from a constrained float for sure.
Yeah. Well, you guys, any other thoughts before I conclude?
I think when we look at, I mean, the Google, Google put up a great quarter. The stock
Yeah,
is still cheap,
pretty
it's
impressed.
unloved. They're saying that AI spend is going to be ticking up. I mean, what I thought was interesting too, when they said that a quarter of their software is being written by AI agents, and we listened to what Jensen said, and I think we're going to hear the same thing from Meta. Is more of these companies' internal work is being done by AI agents, by digital employees, and I think we're going to see the margins on some of these big tech companies like Meta. The margins are going up, which is crazy. And
Well,
I think
the
they're
margin for Alphabet was up 300 or 400 bips from the year before.
right. And that's
The
what I
only
think
thing
people
I would say, Russell, is 10% ad growth isn't great, and that's what's brought them to the dance over time, right?
For sure. For sure.
So
But
I
I
do
mean,
want
they
to.
have a huge presence in AI. And, there's all this skepticism that they won't be able to monetize. There's all this concern over DOJ and, forcing the break up. I mean, I think breaking up Google would unleash value, would get rid of all the ridiculous waste they have in spending the company.
I
I
think
mean,
they
break
should spin off Waymo to shareholders. I want a piece of that.
absolutely. No, there's a bunch of super interesting assets there.
Nadine, did you?
Paul, I've got one more thing for you. So, if people are looking at international names, UBS had a really great third quarter profit. It was about 2 times versus what was expected. If you remember, they were the beneficiary of picking up CS during the crisis, the banking crisis, a little over a year ago. And they had higher revenue than expected, better than expected cost reductions. This is one of those, you can check it out on Reuters, Bloomberg, that everyone's got stories out on it, but it's a name. I will also say that we have in portfolios that was loved and then unloved, and now I think what you're going to see is just like in Olympus, where there's an event and then maybe things go down a little over time, because when you're putting 2 companies together, things take time to cut out, and you're going to benefit from these guys just squeezing out margins, keeping good parts of the business, leveraging a big base, competing with Morgan Stanley. So lots of good stuff going on over there. Nothing happens in a quarter, but I think what you saw here is that they're on the right track on the financial front, given the integration and opportunities for that business to grow.
Well,
Yeah, I did want to put in my 2 cents on Olympus. I used to be on a public company board that competed with them, or actually kind of had a deal with Medtronic, and Medtronic competes with them. It's a great annuity business. I think Nadine mentioned something that, for people that aren't listening that carefully, might have missed, is that as a Japanese company with a foreign CEO, that was a big risk to take. And so there is a losing face type of process that this now goes through, but it will actually reinforce the idea of, hey, listen, we need to tighten the ship and really do better and keep it more insular, in a way, from a management standpoint. I actually think that it's going to be a great change, and these types of things, this is a reputational hit, not on a business related thing. This is a guy making a stupid, if it's true, a really bad decision that ends up blowing him up. It doesn't sound like Olympus isn't a company that's like everyone's doing cocaine. So
that's good. Well, if it was the 1980s, maybe, but we're in 2024 now. So probably not. Hey, you guys. Very good stuff today. Always impactful. You guys, you got to subscribe. Check us out on wallstreetbeats.com. But I'm going to say goodbye to now. I'm Paul. She's Nadine. We have David and Russell, who will be featured in a cage match pretty soon. Reach out to me. I'll be taking bets. And I will see you guys tomorrow.
See ya.
Right.
Hey, I got it for free. I'm going to subscribe right now. I'm going to do it anyway.